After being a lender for 35 years, I'm going to tell you what one of my big pet peeves is, and that's when people expect to get a pre-approval letter without having us do any due diligence whatsoever. Realtors sometimes come to us and say, "Just can't you just issue a letter?" Well, I'm telling you what, that does a disservice to you, the customer. It does a disservice to the realtor. You got to know that you're pre-approved. So I'm going to give you the steps that we follow typically in order to do a pre-approval. Now, first of all, I want to tell you why it's probably worthless when you get a pre-qualification or a pre-approval letter. Most lenders do not go through several steps that are really necessary to ensure that you're going to have a wonderful outcome when you apply for your loan. So let's talk through those steps a little bit. But first of all, let's talk about the difference between a pre-approval and a pre-qualification. Brokers typically cannot issue a pre-approval, so they will issue a pre-qualification. A pre-qualification simply means you're a good person and we think you probably qualify. A pre-approval is typically issued by a lender and it says, you know what, we've checked you and vetted you very carefully and we're going to approve your loan if you meet certain criteria. So there's a little bit of a difference. So when you're making an offer on a property, the other side, the seller, is going to want to say, "Hey, you know what? We're really comfortable that this is going to close and that the lender has done their work." So let's talk about the four things that we require in our company in order to issue a pre-qualification or pre-approval letter. First of all, we want to make sure that we're verifying your income. Back in 2010, when they passed the Dodd-Frank legislation, it did require that on most consumer loans, not all, but almost all consumer loans, that the lender has verified that you have the income to be able to make the payments at certain ratios that meet Fannie Mae, Freddie Mac, FHA, VA, USDA, non-QM guidelines. The second thing that we have to look at are your assets. Now, that means your bank statements, brokerage statements. We want to make sure, and we are basically verifying to the seller that when we issue that letter that you have enough money to not only pull off the down payment, but also the closing costs and have a little bit money left over afterwards in reserve to qualify for that loan. Almost everybody will ask us to issue a pre-approval letter before we run credit. And that's something that it just doesn't make any sense to us because you really need we need to vet your credit. We need to see what you have out there. Not only that your credit is good or good enough, I should say, but also that you don't have a lot of debt out there that would blow your ability to make the payment. Maybe you have so much debt that you wouldn't be able to make the payment. And so certainly we want to be able to verify that. But the fourth thing, and it does really kind of hinge upon the credit report, we have to have the credit report to do this, is to run the automated underwriting system. You've heard, "Hey, I want you to run DU." Well, it's not really DU anymore. It's Fannie Mae and Freddie Mac have their own versions of the desktop underwriting. So basically what happens is we fill out the application, we gather the documents, we pull credit, and then we send it off for electronic underwriting, the automated underwriting system to Fannie Mae, Freddie Mac. And it kicks back either an approval or a denial, or there's a few other things that it does kick back, but it'll either approve it or not, basically. Those four things are critical to be able to issue a pre-approval. And if a lender hasn't done that, then you've got the wrong lender. So let's talk a little bit, if you're an agent or even a customer that's looking to make sure that you've got the right lender doing your pre-approval or pre-qualification, the steps that you would probably ask them to make sure that they've done their work on the letter. So if you're a seller and you're a listing agent that's looking to go under contract and you get a letter, these are the questions you really should ask of the lender to make sure that they've actually done the work. Number one, find out about their experience. Do they have a strong background? When you talk to them, if maybe you've checked them out on LinkedIn to see how long they've been a lender. Do they seem to really know what they're talking about? Have they really dug down and understand or what they're doing? Or did they just pass the test and all of a sudden they're an expert? You'd be surprised how many people issue pre-approval letters with really no credit background whatsoever. Have they run credit? Very important. A lot of times people issue letters just because hey, he's a good guy, I'm going to issue a letter. You know what? It's not worth the paper it's printed on, and it's worthless. Have they run income and have they verified your income and assets like we talked about before? Have they run the automated underwriting system and got a favorable outcome? Or if it wasn't favorable, have they looked further into it to ensure that they can do a loan for the customer? What kind of loan program are they running it through? And this is very important. Sometimes you have a property that might have some issues to it, but you're wanting to go FHA. FHA has a higher standard of the quality of the construction than maybe a conventional or even a non-QM loan would. Did the borrower provide all of the documentation that the lender requested? In other words, hey, Mr. Lender or Miss Lender, did the customer give you your W-2 pay stubs, tax returns, bank statements? Have you gotten all the information you need from the customer in order to make the decision that you've made? And then also, this is very important. Disclose all the pitfalls. And I'm going to give you an example of something that happened just this week. There was a property that had some problems with it, and it wasn't listed in the MLS. But the listing agent was honest enough to come out and say, "Hey, listen, I'm a little concerned about this property. Here's a problem. Can you do the loan based on that?" It was very helpful for us to be able to tell them whether or not we were going to waste their time with an approval or not. So unless the lender is able to answer all those questions to your satisfaction, that letter is not worth the paper it's printed on. So the letter is only as strong as the due diligence behind it. If the lender has done their job, they've collected all that information, then you've got probably a pretty darn good lender. So anyway, if you have any questions, put them in the comments below. I'll try to answer them personally, but that pre-approval letter, make sure it's worth the paper it's printed on, because most of them aren't.